Birkenstock's here for the foot, regardless.
This week in e-commerce, episode 137. I am Mal Cheer, back in Australia with Alex. Alex Ross, how are you?
I'm good, Mal. Welcome home. How are you?
Look, I've been back for about 3 days now. It feels really nice to be sleeping in my own bed, although I'm about to head to Sydney, so I've got another 2 nights travel before a short break.
It's not to talk about the weather, but it's not a bad time to leave Adelaide. It's pretty wet down here at the moment.
It's pretty wet in Sydney as well, from what I
Yep.
understand. So, yeah, but it has been a very busy last few weeks. So we're going to dive straight into it. So our first quickie off the bat is Officeworks have doubled down on everyday low prices. They have announced that they are going to be dropping the prices permanently on 400 additional goods. This is on top of their February announcement where they dropped the prices on 1,000 plus new products. So this is pretty significant in that they're really aiming for that value market and really showing that, when it comes to office products, they're the ones to beat from a price point.
Yeah, 100%. And I think what we're seeing a lot of in this group particularly is loyalty and those point systems and how you can kind of shop within the Wesfarmers group.
Yeah, absolutely. I think that it makes sense. Like, you want people to shop within that ecosystem, and they've rolled out a lot of different initiatives, over the last couple of months. But in particular, I think this makes life really hard for any specialty retailer who is playing in their space, because they've pretty much put their hand up and said, hey, do you know what? If you want value, which is what a lot of people are looking for right now, there's been numerous stories about this, that people are buying, but being much more conscious of what they buy from a value and price point, that it's going to be hard to beat them if you're competing in like that office tech, stationery, school.
It's a lot just like that tagline, we'll match the price or give you a 10% discount. How do you get in after that?
Yeah, you can't, especially when you have the scale they do. But so we're very interesting. So if you are a specialty retailer competing against Officeworks, you really need to think about how are you positioned in the market so that people will buy from you instead, and at the very least, have a more diverse product offering. All right, getting into our second one. This is a really good one. LVMH have decided that they are going to be selling Marc Jacobs after nearly 30 years. So they have sold it for an $850 million to $1 billion deal to WHP Global, which is a fairly significant move and continues a trend of LVMH, the world's largest luxury group, offloading a number of brands over the last couple of years.
I feel like we haven't spoken about LVMH in a few months. So yeah, interesting move. But to your point, it's kind of what we've seen them been doing over the last few years.
Look, and it does speak to the fact that we've talked about this before around the greater consolidation of brands looking to actually divest now. So we've talked previously about a number of beauty brands, Michael Hill a couple of weeks ago, who decided to close some of their brands or at least sell them off. So it just shows that there's a greater focus on focus right now of actually trimming down and actually focusing on a few things rather than trying to be too big. And this is something where Bernard Arnault, the CEO of LVMH, said that 2026 isn't going to be a simple year. So we need to do these things to make things a little bit less complicated for ourselves.
Yep. I think what's kind of to that point in this story as well is keeping Marc Jacobs as the core designer, founder, creative director throughout this ownership as well. So at least the brand is still having that core as it gets passed over to a new owner.
Yeah, absolutely. And one extension which to me doesn't make a whole lot of sense is Birkenstock have launched nail polish. Now, this is their first foray into color cosmetics, but it isn't an extension into beauty because the nail polish is 5 vegan lines which match their most popular shades of their iconic sandals. I'm not sure what to make of this one. It's a strange-ish story.
Yeah, I thought this one I think it's good. It's that classic, okay, how can we cross-sell, get more out of the shopper? They're already advertising feet, so why not also go, okay, and the nail polish? But it is, it's a little bit further away from their niche, right? Very different type of product.
Yeah, and I wonder whether, I haven't worn Birkenstocks for a long time, and I'm definitely not the target market. Maybe I am. When you put on Birkenstocks, do you think about, does my nail polish match? Wouldn't you want it to be contrasting?
Well, I mean, you can style it however you want, but it's still like the toes are on display. Like, or we go to these events and you can't wear shoes and it's a big deal. You got to make sure that your nails look okay.
Yeah, Exactly. Well, this is very interesting. If hopefully it does work for them. It's very interesting nonetheless, but it does like make you think about where you can extend your brand rather than going into something crazy like, let's say, Calvin Klein moving into bed sheets many, many years ago, where this is sort of like adjacent to that, and it vaguely makes sense once you actually read into it a little bit more. It's very much about seeing what works, but it has to make sense. So this might actually work for them.
Well, I think the next piece from here is like foot lotion, or how do you have that like Birkenstocks here for the foot, regardless.
I like that. Here for the foot. Here for the foot. All right. You heard that here first, Birkenstock. Here for the foot. Okay. And our last quickie is on the budget. Now, the federal budget was handed down last week. And as part of that, the thing which caught my eye was the ACCC enforcement that they have announced funding of $68 million over the next 4 years for the ACCC. And this is specifically designed to allow the regulator to be able to strengthen competition and consumer law enforcement. In particular, one line specifically called out Shein and Tumi, saying that they want to address unfair competition from ultra cheap offshore platforms.
Yeah. Yeah, I think it's good to see this. What do you make of it? Where do you think it'll go?
I'm very excited for this. It will be a long road, and I think Shein and Temu have very deep pockets and will probably fight this tooth and nail. But it does put the onus on online marketplaces now to ensure that their products pass safety checks. Now, we've all heard stories about the quality of some of the products you do get from them, and I'm always very dubious about anything which comes from there. So now this puts the onus on the marketplace to actually ensure that what they're selling is safe, and if they're unable to meet that requirement as well, then I'm assuming they won't be able to sell the product, or they'll be fined fairly significantly. This has been a long time coming, and I think we do need more of these things in place to stop the influx of those ultra cheap products, which disrupt competition and make things very hard for domestic retailers, and B, are also unsafe for consumers as well.
What with that definition of marketplace, do we think Google, Facebook, advertising extends to that?
Yeah, I don't think advertising platforms will count as that. I think the marketplace still needs to be where you're buying from. And fundamentally, at this point anyway, Google and Facebook are the pipes to get you there to the platform.
Yeah, not to tangent too far, but was there any other mention of these brands advertising at the Meta conference that you were at, and how they're kind of evening the playing field?
No, not really. No, I don't think Shein and Temu were mentioned at all, which is actually quite surprising in hindsight,
Yeah.
given how much advertising revenue comes from them. Okay, our first quickie for this week is a really big one, and that is that Coles have officially lost their ACCC down case, where the regulator, and we're talking about the regulator again, have found that on an examination of 14 products, 13 of those did not pass the test and were not found to be genuine discounts. So they were the pricing was not deemed to be accurate, even though that Coles' defense was that there was a price rise on their side, so they had to put up the price. But they rejected that because they said that for the ordinary customer who wasn't aware of that, it still seemed to be misleading. So this is, I would have to say, a fairly landmark case when it comes to discounting. And don't forget, Woolworths are also in the crosshairs as well, in a very similar case where you're going to need to actually really look at your pricing strategy to make sure that if you are offering a discount, it is actually a genuine discount.
Yeah, it's all happening in the supermarket vertical at the moment. Look, I think it's a blow to consumer trust in retail with all of these stories. When we were kind of getting ready for this episode, I called out there is just so much news on this at the moment. And we're seeing, I saw another article from ABC just about the cost of goods and those different verticals that have increased. So it's very heated at the moment.
Yeah, it definitely is a win for consumers, in the set that, hopefully this does allow you to have a bit more trust in the pricing which you see. So when you go into a sale, you can be fairly confident that it's actually a genuine discount you're going to receive. Now, having said that, though, this does change how people communicate discounts as well. And I think that's probably the angle where which hasn't really been explored too much in terms of like if sales are going to be running fewer sales, or what the was now pricing is going to be. Whether we're just going to move to a period.
Presumably, with kind of looping back to that previous story, with more investment in the ACCC, there'll be better definitions around all of this as we continue to dive into it.
Exactly. I think, there's a lot which they're looking at, particularly around like the reasonable period to be announcing that price rise. Because again, Coles were arguing that, their prices went up, but it went up. So then they discounted it to the price which it was previously. And because that reasonable period, the ACCC did not think that it was actually reasonable, that's where it kind of fell flat. So I think there's a couple of things which I think every brand needs to be looking at now in terms of what your pricing strategy is. If you are, for instance, offering like 30% off everything site-wide, except for a few things, but you offer it through a 30% off, 40% off coupon off through a Klaviyo flow, for instance, there's things to consider in terms of like how you are discounting and what the perception of what the true price is and whether it is a legitimate discount on there. Now, I think things like flows and offers through there are probably won't really fall into the definition of a discount, since it's more like more a coupon which you can use site wide. But at the individual product level, when you're looking at compare out pricing, you're really looking at what that actually is when you're running your promotions to make sure that when you do a sale, it is actually genuinely that. So a lot to unpack here, and I think there's going to be more we're going to see, particularly since the Woolworths case is also ongoing, as well as another individual case, class action from Benjamin Demery. Okay, our next deep dive is Country Road Group have consolidated onto Shopify. So they are following the trend from Brand Collective, who moved their 19 brands onto Shopify. Country Road have moved all 5 of their brands onto Shopify, and really goes to show that we're continuing to see this massive trend from a lot of retailers towards unifying on the Shopify platform rather than custom Magento or Salesforce.
It does, Val. I just think it's a trend that's been going on for a while. It's not the tail end to say that we're coming to the end of an era, if you know what I mean, but by no means is this new news or exciting news, other than the fact that Country Road are making a tech change.
Yeah, yeah, you're kind of right, but it just goes more to like the overall consolidation which we're seeing, and I think one of the risks around homogenization as well, where when you see more and more brands who are just using a single platform, Shopify suddenly becomes the dominant platform. And yes, there are pros and cons to that. So obviously, from a consumer point of view, things like Shop Pay really have a material impact on your conversion rate on your site, because people don't need to enter in their details again. But we also means that everything starts to look really the same now. And even with some brands who I work with who've launched new sites, it just looks like a Shopify site. You're kind of losing a lot of that uniqueness in there as well. Now, Shopify, through how their themes work, but also through different apps, allow you to really customize the look and feel and the functionality of the site. But it does speak to the fact that we're kind of entering this period where we all kind of start looking the same, or we all kind of start doing the exact same thing.
I think, look, with brands that I speak to, they more and more Shopify POS, which is awesome to see as well. Simple is good at this point. Complex systems slows businesses down. So at the risk of maybe, yes, having a shared tech stack, but there's so many more elements that can be personalized and obviously customized as well. I think, just that agility piece is worth it.
Yeah, I don't disagree for that. And like anyone who asks me who isn't on Shopify, I'm 100% you should be on Shopify, because it just makes so much sense. But the contrarian in me is always thinking like beyond that, okay, what actually happens? What actually happens to that, particularly when Shopify becomes a monopoly and commands such pricing power as well when everyone is on there? How do you switch? And it's really hard to compete against a Shopify because the switching costs are so high in terms of like all the apps which you're using in there, how much data is being stored in there, but also the integrations it has with everything as well. Like nothing integrates better with your Facebook and Google ads than Shopify. Okay, moving into our last deep dive is Temple & Webster have missed their guidance. So they have taken a 30% earnings hit and now are sitting just slightly above their 52-week low at $5.83. Now, this is pretty significant in the fact that Temple & Webster have been on a bit of a tear lately, but since August 2025 to today, they've gone from $30 to $5, which is a big reaction from the market in terms of like how they're currently performing, because their EBITDA, which they was expected to hit 30 million, actually landed for FY26 at about $20 to $22 million, which is fairly significant, along with a 6% drop in top line revenue as well.
Yeah, it just seems obviously it's that big, different, disproportionate drop in share worth versus that revenue 6% below. But yeah, they've obviously got a lot to turn around.
Yeah, I think part of this is that they actually made a conscious decision back in February to focus more on optimizing margins. But I think by focusing on that as well, they've missed the fact that what consumers are shopping from them for. Where when you look to buy from Temple & Webster, you expect to get fairly good value as well. When looking at the AOV is not like astronomically high. It's a very realistic sort of number. So looking at this, it's like, well, if the customer and the market is looking more towards value, but then you're optimizing your margins to actually increase the price, perhaps offer less value in the eyes of the consumer, it's actually hurt them by the fact that their sales have actually declined as a result. Yeah, so it's always one of the challenges when you do look at pricing about what that actually does to you, and not just to your top line, because it can have margin impacts. But by lifting your margins, you can also impact your top line revenue as well, which then has downstream effects, as I think what we've seen with Temple & Webster. Okay, that's all we got time for. A very quick episode today. Alex, any final thoughts to share before we wrap?
No, look, lots going on. I think we're all super busy. It's going to be end of financial year soon, which is just absolutely bonkers. Doing a bit of travel to Melbourne in a couple of weeks, but other than that, business as usual. Mel, what about you?
About the same. Things are really heating up over the next few months. There's going to be a lot of change. I think I recommend to everyone that by September, October, you stop making any significant changes and really just knuckle down and start working towards peak. So right now, it's just this frantic next couple of months to make sure everything's in place and locked in for the Q4. All right, everyone. Thanks for listening. Have a great week. Keep innovating, keep growing, and keep selling. And we'll be back next week.
See you soon.